Friends, welcome you all once again on Ind AS 116 lecture. Students, today we are going to talk about a very important, a very detailed, and I would say one of the complex standard, which is Ind AS 116. If you will understand this standard, actually, it will not be a complex standard. It will be I would say, it will one of the simplest standard. If you will be able to understand it properly. I hope my voice is clearly audible, students. I hope you are able to listen me. Yeah. Okay. Great. Friends, although as far as concept is concerned, this leases concept is not a new concept, right? In your IPCC, you also had a session on AS 19, or you have gone through with accounting standard 19, which is one of the oldest standard on leases, right? Now, what about this Ind AS 116? So let's discuss about this standard. Before discussing about this standard, let me give you some inputs or let me give you some past history about this standard. If I talk about AS, our old IGAP, right? We have accounting standard 19, which takes care of leases accounting, right? And in the leases accounting in AS 19, you have already learned that there is lessor, there is lessee, two parties are there. Lessor is one who gives his premises on rent, right? And who earns the money. Lessee is one who take the premises or who take the asset on the rental basis and pay the money. Okay. From the lessee perspective, there are two kind of leases, operating lease and finance lease. From the lessor perspective, there are two kind of leases, operating lease and finance lease. And you are already aware that operating lease are those leases where risk and reward are not transferred. Finance lease are those leases where risk and reward are transferred, right? This is what we know. This is what we are aware about AS 19, right? I'm not talking about Ind AS 116. I am talking about our old accounting standard AS 19, right? Very good. Friends, then after, if I talk about globally, earlier IAS 17 was there. IAS 17. International Accounting Standard 17 was there, which takes care of leases, right? This standard was effective up to 31st December 2018, right? And with effect from 1st January 2019, with effect from 1st January 2019, 1st January 2019, a new standard came. Sorry, it was IFRS 16, not IFRS 19. It was IFRS 16. With effect from 1st January 2019, IFRS 16 was introduced for leases, and this standard, leases, replaced earlier version of IAS 17, right? IFRS 16 had replaced IAS 17. Likewise, in India, we adopted Ind AS on 16th February, or I would say in India, we have notified Ind AS on 16th February 2015, right? 16th February 2015. So we had Ind AS 17 on 16th February 2015. We have notified Ind AS 17, the old standard on leases, which is counterpart of IAS 17. And this standard was applicable up to 31st March 2019, right? Globally, the calendar year is the financial year. In India, financial year is 1st April to 31st March. So till 31st March 19, Ind AS 17 was applicable with effect from 1st April 2019, since globally IAS 17 was no more and IFRS 16 was introduced with effect from 1st January 2019. Consequently, we have also notified, or we had also introduced Ind AS 116, right? In place of IFRS 16, we have issued a standard Ind AS 100 plus 16, okay? And this standard was applicable from 1st April 2019. So this is the global scenario. This is the entire scenario about accounting standard, leases standard, IFRS leases standard, and Ind AS leases standard. So right now, if I talk about India, old accounting standard AS 19 is applicable. Globally, IFRS 16 is applicable. In Ind AS, it is Ind AS 116 which is applicable. Now the question arises, what was the need? What was the need for changing the standard IAS 17 to IFRS 16, right? In India, the change was consequential, right? Because our Ind AS are the Indianized version of IFRS applicable to India. So I would not say why we have changed from Ind AS 17 to Ind AS 116. So we are following IFRS guidance. We are following IFRS issued by IASB, right? So whatever change they will do, we have to inherit that change. We have to get that change and we have to implement that change, right? But the question arises, why the lease standard was changed? Whether it was only change of number, name has not been changed. So whether it was only change of number or some fundamental has also been changed. Friends, let me tell you, this IAS 17 to IFRS 16 journey has made the entire change in the lease accounting from the lessee perspective, right? In every lease, there are two parties. Whenever I'm talking about a lease accounting, the lease accounting has to happen in the books of the lessor and the lease accounting has to happen in the books of the lessee, right? This is what we have learned in AS 19. This is what which is there in IAS 17. This is what which is there in Ind AS 17. And this is what which is there in IFRS 16 and Ind AS 116, right? Whenever lease words comes into mind, only two books needs to be considered, lessor books and lessee books, because these are the two parties who are discussing, who are interacting, who are doing the transaction with each other, right? So friends, this new standard on leases Ind AS 116 or globally IFRS 16 had changed the entire gamut of accounting for the lessee, right? And there was a big change in the lessee accounting in comparison to the old standards, right? If I talk about the old standard AS 19 versus IAS 17 versus Ind AS 17, there was no big change. There was no major change. But if today I'll compare AS 19, our old accounting standard, versus Ind AS 116, it has completely been changed, right? There is a huge differences between Ind AS 116 and AS 19. If I talk about IFRS 16 versus Ind AS 116, there is no change, right? Our Ind AS 116 is cut copy paste, I would say, from IFRS 16. Okay. So if you are a GFRS student, for you, there will not be any change. Okay. If you are learning Ind AS 116, your IFRS 16 preparation for GFRS paper has already been covered, right? Great. I can see a lot of students, Viraj, Mansa, Purvi, Janvi, Namrata, Shubham. Great. Again, a very good morning, guys. So this was all about the name and number of the standard, that what is applicable globally, what is applicable in India, right? And this standard, Ind AS 116, was notified on 30th March 2019 by Ministry of Corporate Affairs. This is the last standard as of now, which was notified by the Ministry of Corporate Affairs, right? MCA. Now, friend, what was the need of the change, right? So, friends, what happened in our accounting standard 19 and the old version of standard Ind AS 17? They were saying that if you are taking an asset on a lease basis, first of all, let's understand the lease. For example, who's there? Viraj is there. Okay. So Viraj is a lessee. Viraj is a lessee, right? Viraj took a household. Viraj took a house on a rental basis. Viraj took a premises on a rental basis, right? So Viraj is a lessee, and Mr. X is a lessor, landlord. So Viraj and Mr. X entered into a contract where Mr. X is leasing his three-story building or his 3-floor building to Mr. Viraj on a lease basis. and Mr. X is charging a lease rent of 1 lakh rupees per month, and the agreement is happening for 3 years. Now, Viraj, please tell me, by paying a lease rent, are you getting any right related to this property? Are you getting any right related to this property? Yes, you are getting a right to enjoy that property. You are getting a right to use that property. You are getting a right to live in that property, right? So you are getting a right to use those properties. You use that property, right? Of course, you are not having a right to sell this property, right? But as far as use is concerned, you are having all the usage, all the rights for using that property. Whether Mr. X, who is the owner of this property but has provided this property on a rental basis, can Mr. X came and enter into your house at any point of time? During the lease agreement, can Mr. X enter into your house without your permission at any point of time? Answer is no. Because if I'm taking something on a rental basis and the relating to the use, the entire rights belongs to me as far as the use of the property is concerned. The landlord cannot come at any point of time. If he has to come to my house, he has to take my permission. He has to ask Alok, or let's say Viraj, will you be there at 2 a.m. or 2 p.m. or should I come at that point of time? Right? And probably Viraj can say that, no, sir, I will not be there. Please come tomorrow. Only my mother will be there, or only or no one will be there, right? He can say that. So friends, the point was, when a person is taking something on a lease rental basis, he is getting a right to use that property. And if he is getting a right, then why these rights should not be capitalized, right? The point is, like intangible asset, the rights are getting capitalized. So why the rights will not be capitalized? Because what is happening in this case, Viraj being a lessee, it's an operating lease. Viraj has taken a house for 3 years of lease rental basis. So Viraj will make an entry, rent expense account debit to Mr. X account, Mr. X account debit to bank account, or alternatively, rent account debit to bank account, right? Mr. X will pass an entry, bank account debit to rent income account. Okay, so this is a operating lease treatment, right? But when Mr. X will provide this property on a lease basis to Mr. Viraj for a period of, let's say, 30 years or period of 20 years, and the remaining life of the house is also 20 or 30 years, in that case, this will be a case of finance lease. You have read the 5 indicator of finance lease in AS 19 also. When the lease period is substantially equivalent to the economic life of the asset, then it is one of the indicator of finance lease. In case of finance lease, Viraj will recognize the asset in its books of accounts, and Mr. X will de-recognize the asset from their books of accounts, and Mr. X will recognize the leasehold receivable, right? This is what the finance lease accounting was there. So friends, in our old accounting standard 19, this is the accounting treatment in case of lessee and the lessor in case of operating lease and finance lease, right? In case of operating lease and finance lease, 2 kind of lease were there, operating lease and finance lease, right? So this is still there in accounting standard 19, and same situation was there in old international accounting standard 17 and Indian accounting standard 17 up to 31st March 2019. Now what happened, friends? Around 15 years back, the Securities and Exchange Commission of USA was analyzing the balance sheets of some listed companies. So I am talking about the history, that why IAS 17 was replaced by IFRS 16. What was the need for bringing this IFRS 16 standard, right? And when you understand IFRS 16, Ind AS 116 is the replica of IFRS 16, right? Okay. And in AS 19, same treatment is there. And the same treatment was there in IAS 17 and Ind AS 17. But IAS 17 and Ind AS 17 was demised, or it was replaced by Ind AS 116 or IFRS 16. But why? 15 years back, when Securities and Exchange Commission of USA was analyzing the balance sheets of the listed companies in USA, so they got a very critical fact. And they have seen that out of 3 trillion US dollar, and they have seen that approximate 3 trillion US dollar assets are outside the balance sheet of the listed companies. 3 trillion US dollar. Can you understand this? 3 trillion US dollar. What is the GDP of India? What is the GDP size of India? Approximate 3 trillion US dollar, right? And to that extent, the assets were lying outside the balance sheet and the liabilities were lying outside the balance sheet, right? The assets and liabilities were lying outside the balance sheet. How come this is possible? Let me explain you. And friends, they have also found that the existing global standard on leases is inconsistent in terms of accounting and reporting. I'll give you 3 scenarios and you need to tell me that whether it is inconsistent or not, the older standard. Let's say, let me take the name of a student. Yes, let's say Bhaskar. Bhaskar has its own capital, it has its own money, and Bhaskar has purchased a machinery. Bhaskar has purchased a machinery for use in the production of goods and services. Purchased a machinery from own funds. Now what Bhaskar will do? Bhaskar will recognize this machinery in the books of accounts. Bhaskar will recognize this machinery as an asset in the books of accounts, right? Machinery account debit to bank account. Namrata took a loan for purchase machinery, for purchase a machine. Now Namrata, what you will do? You will show machine as an asset in the balance sheet and loan as a liability in the balance sheet, right? You have taken a loan, okay? You have taken a loan and you will capitalize machine as an asset and loan as a liability in the balance sheet, right? Accounting entry, machine account debit to bank and bank to loan liability, okay? This is what accounting entry you need to pass, Namrata, right? Right? And the life of the machinery is, let's say, 3 years, okay? Or let's say 5 years. Life of the machinery is 5 years. This is what entry you need to pass, guys. Bhaskar will capitalize the machine, show it as an asset. Namrata, instead of having its own funds or instead of taking a loan, has opted for getting this machinery on a lease basis. What is a lease? When you take a loan, you are paying EMI. You are paying EMIs, right? So when you are taking something on a lease basis, what you will pay? You will pay monthly rental. Instead of paying monthly installments, you will pay monthly rental. And friends, lease is another prominent source of financing, right? What is a lease? It's a form of financing. If I have money, if I have 1 crore rupees, I'll go and I'll buy a flat. If I don't have 1 crore rupees, I'll go and take the flat on a rent basis. And probably instead of paying an EMI, I have to pay a monthly rental of 40,000 or 50,000 rupees. That's why you must have heard that people are saying that if you are paying a rent, then take a home loan and pay EMI, property will be yours, right? So what is a lease? Lease is another form of financing, and in US, lease is an important source of financing, right? When you go to US, you will get everything on a lease basis. You will get car, you will get even two-wheeler, and house is a very common thing. So it's on lease everywhere, right? You will get refrigerator, you will get TV, you will get whatever microwave oven, sofa, bed, whatever you want to have on a lease basis, you can get that on a lease basis, right? So lease is again another form of financing. Now the question arises. Mansa has taken this machinery on a lease basis, right? Took a machinery on lease basis. Right? So Bhaskar has purchased a machinery and the life of the machinery is 5 years. Bhaskar has capitalized the machinery as an asset. Namrata has taken a loan. Namrata has taken a loan and purchased the machinery. And in this case, Namrata has shown machine as an asset and loan as a liability, right? For 5 years. The loan period is 5 years. The life of the machinery is 5 years. Mansa has taken this machinery on a lease basis for a period of 5 years, right? For a period of 5 years. But what Mansa will do as per AS 19, okay? And I have told you that old IAS 17 and Ind AS 17 was similar to IAS 19. So Mansa will just recognize the leasehold rental on accrual basis and Mansa will pay the lease rental. Mansa will not recognize any asset in the books of account. Guys, don't you think in all three scenarios, they're using this asset for 5 years? And if I'll compare between scenario 2 and 3, in scenario 2, you are showing a liability and you are showing an asset, right? And when you will not pay the loan, probably the machine or the car will be seized by the banker. In scenario 3, you are also getting a right to use this machinery for a period of 5 years. You're getting a right to use, right? And you are paying a committed lease rentals. You have entered into an agreement for 5 years, right? And you remember one of the disclosure you were doing in the notes to accounts? Minimum lease payments up to 1 year, 1 to 5 year, more than 5 year. Have you seen this disclosure while doing the audit of the financial statement in your articles period as well? In AS 19, this disclosure is there. You have to disclose minimum lease payments up to 1 year, 1 to 5 year, and more than 5 year. And this minimum lease payment is on the basis of the non-cancelable lease term. Non-cancelable lease term, right? Is that clear? Non-cancelable lease term. Hence, don't you find the inconsistency? When Namrata was purchased a machinery on the basis of loan, right? She was showing the asset and liability. But at the same time, Mansa is taking again this machinery on a loan, which is a lease, right? She is neither showing an asset nor showing a liability. Although she has a contractual obligation for a period of 5 years to pay the rental, right? If she will default, or let's say even though if will not use the machinery, again she has to pay a rental for a period of 5 years because 5 years is the non-cancelable lease term. And she got a right to use this machinery for a period of 5 years. And when she is getting a right to use, the lessor will cannot interfere, right? The lessor cannot say that this is my machinery and I need to make a production for let's say 6 months from this machinery. He cannot do so, right? So friends, a company which is taking a loan and then buying an asset, the assets and liability will be inflated. But a company at the same time, which is not taking a loan, but taking another form of loan in terms of lease, that company is neither showing the asset nor showing the liability. So the numbers of company 2 and company 3 will not be comparable. The numbers of company 2 and company 3 will not be comparable. Why? Because one company is showing asset as well as liability, but the second company is neither showing an asset irrespective of getting a right to use that asset. The company is neither showing an asset or nor showing a liability. The company is not showing a leasehold liability as well, right? And friends, that is why when analyzing the balance sheets of the big listed companies, the Securities and Exchange Commission found that the asset relating to the right to use of the underlying asset is outside the balance sheet of the companies in the tune of 3 trillion US dollar, which is equivalent to India GDP, right? And in a similar fashion, this amount of the lease liability is also outside the balance sheet, right? So friends, That is why they felt the need to change the standard so that the standard should be consistent and comparable between the industries and between the entities, right? Either who are taking a loan or who are taking on a lease basis, because lease is another second form of financing, right? I hope it is clear to all of you guys. I hope it is clear to all of you. The background is clear to all of you, and that is why this standard is there, right? And hence, friends, IFRS 16 was introduced and IAS 17 was demised, and IFRS 16 has changed the entire lease accounting in the books of the lessee. And they say that whenever the lessee has obtained an underlying asset on a lease basis, the lessee has to capitalize right of use asset and the lessee has to credit leasehold liability, like point number 2. Is that clear? I'm just setting a context. Of course, I will discuss each and every concept with the help of the illustrations, right? So this is what it is there. Okay. So whatever I told you in 2005, that is 18 years back, Securities and Exchange Commission staff paper recommending Financial Accounting Standard Board and International Accounting Standard Board to revisit accounting guidance for leases, right? And even in US GAAP, Accounting Standard Codification ASC 842 has also been changed, right? So globally, this standard has been changed from IFRS perspective as well as US GAAP perspective. In India, it has also been changed from Ind AS perspective. In 2016, International Accounting Standard Board introduced IFRS 16, which has replaced IAS 17 and related interpretations. This standard was made effective from 1st January 2019 globally. In India, on 30th March 2019, MCA notified Ind AS 116, which replaced Ind AS 17. This standard was made effective from 1st April 2019. What had changed in comparison to the old standard in Ind AS 116 or IFRS 16? Accounting for lessee has completely been changed. I would not use the word significantly. I would say it has completely been changed. Moving off balance sheet financing to on balance sheet for lessees, right? The lessee were not showing, in case of operating lease, the lessee were not showing any asset or liability, but now the lessee has to show right of use asset and leasehold liability in their balance sheet, right? Then the lessee will capitalize all the leases in the balance sheet, except there are two exemptions: short-term lease and low value lease. This we will be discussing. No substantial change in accounting for lessor. From the lessor perspective, there is no change in the accounting, right? There is no change in the accounting. Only disclosure have been enhanced. Okay? Only disclosure have been enhanced. So this standard will lead to more transparency and more disclosure in terms of the new guidance on leases. Right, guys? Now coming to the main agenda of the standard, Ind AS 116. Friends, I hope the context is clear to all of you. I hope you guys are able to understand that how this Ind AS 116 is different from Ind AS 17, the older version of the Ind AS standard on leases. How this IFRS 16 is different from IAS 17 and why the new standard had been introduced, right? And what is the big change between AS 19 and Ind AS 116, right? The big change between Ind AS 116 and AS 19 is, under AS 19 from the lessee perspective, concept of operating lease and finance lease is there, but from the but in Ind AS 116 from the lessee perspective, there is no concept of operating lease and finance lease. All the leases needs to be capitalized, okay, like a finance lease. Mansa has made a very good point. She's saying that, sir, it means there is no difference between operating lease and finance lease now in Ind AS 116. Yes, Mansa, you are right. You are right. Is that clear? Okay. Thank you, Purviben. Thanks for the feedback. Yeah, guys, now what is there on the menu or on the plate of Ind AS 116? First, we need to discuss the objective, theoretical part. Then we will discuss this standard is applicable to which territories, what is the territory, what is the scope of this standard. We'll talk about recognition exemption, that what are the cases where the lessees are not required to capitalize right of use asset and leasehold obligation. Is there any cases where the lessee will do the accounting as per AS 19, means only rental accounting, only rent expense accounting? So yes, there are two cases which we are going to discuss in this standard. Then this standard talks about what is a lease, definition of lease, whether an arrangement contains a lease, what is a lease and non-lease components, and whether two different contracts can be combined, two different lease contracts can be combined. So this standard has given some guidance on the leases, right? Then we will be talking about the key concepts, like what is meant by inception of the lease and what is meant by commencement of the lease. Then what is meant by lease term? Because in the leases standard, the identification of the lease is important, because lease accounting has to happen on the basis of the lease term. Then minimum lease payments, right? Lease payments are also required to be estimated or required to be assessed, that what is covered under the lease payment. You remember, have you understood the concept of, have you remember the concept of unguaranteed residual value, guaranteed residual value, right? So we'll talk about what is meant by lease payments. Then discount rate, right? That what is the concept of discount rate, initial direct cost, economic life, fair value. These concepts we are going to discuss in this standard. Then we'll discuss the lessee accounting, which is a critical and important accounting from the examination perspective as well. Generally in Ind AS 116, in examination, the question 70 to 80% times the question may be asked from lessee accounting, because lessee accounting is complex and critical and it's a new accounting. The lesser accounting is same, whatever you have learned and whatever you have read in AS 19 or old Ind AS 17. So it is exactly same, but the lessee accounting has completely been changed. So lessee accounting is an important accounting from the Ind AS 116 perspective. So when I talk about lessee accounting, initial recognition and measurement is there. Initial recognition and measurement. We'll talk about initially how this lease contract is going to be recognized, like right of use asset and leasehold liability, and at what value it is going to be measured. Right. Then subsequent measurement we're talking about on the reporting date. Then there is a concept of remeasurement, right? When a lease liability is required to be remeasured in the books of the lessee. What happens when there is a lease modifications? For example, earlier the lessee has taken 5,000 square feet of the area on a rental basis, but now after COVID, lessee wants to surrender 50% of the area and continue with only 50% of the remaining area. Or the lessee was earlier paying a rent of 20,000 rupees per month, but now he got the concession after COVID, and now he is only paying 15,000 rupees per month. So if there are lease modification, how those modifications accounting has to happen. Then the presentation and disclosure I'll talk about. I'll also covering lessor accounting, right? Because it is part of Ind AS 116, and we will discuss in lessor accounting what are the classification of the leases. So from the lessor perspective, operating and finance lease concept is there, but from the lessee perspective, there is no concept of operating lease and finance lease, and that is why this lease classification box is not there in lessee accounting. Then we will be talking about what is a finance lease, what is the operating lease, and what are the accounting treatment in the books of the lessor when it is a finance lease, when it is a operating lease, and what happens in terms of modifications, right? And then presentation and disclosure in the books of the lessor. As far as other matter is concerned, we will be talking about the subleases, and we will be talking about the sale and leaseback transaction, which is again one of the complex and critical concept of Ind AS 116, right? And we will be talking about subleases, which is a new concept. The accounting is new in this case as well, right? So friends, if you will ask me, sir, from the examination perspective, what is critical, what is important? From the examination perspective, three things are very important. Number one, identification of the leases. Number two, the entire lessee accounting. Number three, sublease and leaseback, sales and leaseback, subleases and sales and leaseback. These three concepts are very critical. Identification of leases means lease, right? Lessee accounting, and sublease and sale and leaseback, right? These items are very important from the examination perspective. Is that clear? Yeah. So guys, I have just set the context, and Namrata, when I'll teach uh, lessor accounting, then I will be covering that. Okay, right? Remeasurement can happen at any point of time. Okay, yeah. Shall I move forward? This is the entire boundaries of Ind AS 116. We will be covering this Ind AS 116 into 4 sessions today, tomorrow, Thursday, and Saturday. Right? In the 4 classes, I mean to say in 12 hours, this entire Ind AS 116 will be completed. Friends, let's move on, and I will be talking on these parameters when I'll cover you the concepts, right? When I'll tell you the concepts. Okay. What are the highly impacted industries like aviation industry? One of the participants was saying, I think Mansa was saying that sir, aviation industry was badly impacted due to this standard. Oil and gas, retailers, because like Big Bazaar, Reliance Fresh, right? They are having a lot of departmental stores. Telecom companies, they are having a towers on the leasehold premises. IT industries. So these industries are badly impacted, okay, due to the introduction of this new standard. They have a huge amount of the assets on the balance sheet and huge amount of liability on the balance sheet, right? Huge amount of the liability on the balance sheet, okay? Because in lessee accounting, the lessee has to recognize right of use asset on the basis of present value of the future lease payment, like in the older version of finance lease accounting. What we were doing in accounting standard 19, in case of finance lease accounting, the lessee was capitalizing the asset on the basis of present value of the future lease payments, right? And the lessee was crediting the leasehold liability as well. Same accounting is there from the lessee perspective in Ind AS 116. In Ind AS 116, there is no classification between operating lease and finance lease. The lessee has to recognize right of use asset and leasehold liability on the basis of present value of the future lease payments on the non-cancelable lease term, right? Okay, Namrata, is it clear to you? Yeah. So guys, now let's move on. Coming to the objective of the standard, the objective of the standard is to prescribe about the lease accounting. What is the scope of Ind AS, right? 116. What is the scope of Ind AS 116? Ind AS 116 shall be applied to all leases, right? Except what? Leases to explore for or use minerals, oil, natural gas, and similar non-regenerative resources. For example, if Adani is getting a right to explore coal, explore some minerals, right? Or ONGC is getting a right to explore oil and natural gases, right? So government has given them a sea area or a fields or let's say some land on a lease basis to explore the minerals, oils, gases, and similar non-regenerative resources. In that case, this transaction will not be covered under Ind AS 116. This will be covered under Ind AS 106, right? Ind AS 106 talks about exploration for and evaluation of mineral resources, right? Number 2, leases of biological assets held by a lessee, right? If lessee has taken some animals, biological assets on a lease basis, then this biological assets which the lessee has taken on a lease basis, it will be covered under Ind AS 41 agriculture standard. It will not be covered under Ind AS 116 standard. This is the guidance which is given in Ind AS 116. Okay. So Ind AS 116 is applicable to all leases. Some negative list is given. Exceptions are given. One, the leases to explore or extract mineral resources, oil and gas, this standard is not applicable. Leases of biological asset, this standard is not applicable. Service concession arrangement. You understand the meaning of service concession arrangement? Yeah. You understand the meaning of service concession arrangement? Have you used the toll whenever you have gone through any highway? Have you paid a toll plaza? Have you paid toll tax? Right? When you see the name of the company on the toll plaza, you will find The name of the company is Dharmendra Roy Private Limited. Dharmendra Roy Constructions Limited. It is a private company, but the road belongs to the government. Road belongs to the NHAI, National Highways Authority of India, right? So friends, service concession arrangement means when the government is giving any asset or area to a private party to develop it, to develop the infrastructure and collect the money from the public for a specified period of time. This is known as a service concession arrangement, right? Public-private partnership. This is known as a service concession arrangement. So if government has given, let's say 100 kilometers of road, 100 kilometers of area, and government has told that private company that please develop the road, develop the highway on for 100 kilometers, and you can collect the toll for next 30 years. So this will be covered under Appendix C or D of Ind AS 115, revenue from contract with customers, right? It will not be covered under Ind AS 116. Licenses of intellectual property granted by the lessor, right? If the lessor has given a license, right, for using an intellectual property. If I have some intellectual property, I have some prototype, right? So I have developed some prototypes. I have developed some formula, and I am giving you a license to use my intellectual property rights, right? So in that case, the license of intellectual property granted by the lessor is again covered under Ind AS 115. It is not covered under Ind AS 116, right? Sir, whether examination perspective, these parts are important, answer is no, right? But yes, from the standard perspective, of course, you need to know that, okay, this standard is not applicable on these set of transactions. Point number 5, rights held by a lessee under licensing agreement for such items as motion picture films, video recordings, plays, manuscripts, patent and copyright. Okay. Guys, recently, which film you have seen? Which new movie you have seen recently? Yeah. Any movie which you have seen recently? Which you have watched recently? Any movie? No, any movies? You guys are only learning. You guys are only doing studying. Yeah. Pathan movie, right? So the last movie of Shah Rukh Khan was Pathan. Okay. And PVR got a right to play that movie, right? So the producer and director of Pathan has given a rights to PVR, right? Or the Kerala story. Okay. Mansa is only studying. Mansa, please watch some movies also. Okay. It will fresh your mind. Good movies. So Pathan, PVR got a rights to play or to just play this Pathan movie in their cinema halls, in their theaters. So friends, if a company is getting a right, a lessee is getting a right under licensing agreement for such items like motion picture films, video recording, plays, manuscripts, patent and copyright, these rights are not covered under Ind AS 116. These will be covered under Ind AS 38, intangible assets, right? So PVR will capitalize those rights as Ind AS 38, not as Ind AS 116. Okay. But a lessee may, but is not required to apply Ind AS 116 to leases of intangible assets other than described herein. Okay. Is that clear? Is that clear, guys? So these are the exceptions. Now, let's discuss a very important definition, lease. Now, according to you, what should be the definition of lease, according to you? What is a lease? Let's understand. Probably you guys either have taken a property on a rental basis in your lifetime, or you guys have given a property on a rental basis, right? So this is a very, very popular form, right? Taking a something on a rental basis or giving on a rental basis. So in case of a lease arrangement, in case of a lease agreement, what is there? Please tell me. Number one, there are two parties. There are two or more parties, right? And what is the name of these parties? What is the name of these parties? Lessor or lessee? There are two parties, lessor and lessee. Okay. And what is the next thing? Let's say, let's talk about a property agreement, a property rent agreement. In the rent agreement, the name of the lessor will be there, the name of the lessee will be there, then the property number will be there, that Mr. XYZ is taking this property on a lease basis, right? Taking the property situated at floor number, second floor, plot number 16, sector 6, Vaishali, Ghaziabad, right? Effective from 1st April 2023, right? So it means two parties are there, underlying asset is there, and then rights and obligations will be written on the agreement, that the lessee is allowed to use this property, right, during this lease agreement, and the lessee has to maintain and clean the property at every point of time. Okay, then after underlying assets, the rights and everything will be there. Then the rental amount, what is the monthly rental amount, it will also be there. Lease payments, the lease payments will be there, and the tenure of the agreement will be there, and tenure of the agreement will be there, right? Tenure of the agreement will be there. So friends, if I talk about a lease agreement, it talks about parties, it talks about asset, it talks about consideration, it talks about time period, right? It talks about time period. Four things are critical aspect in lease agreement. One, parties. Two, asset. Which asset is taking on a, which asset is getting on a lease. Number three, consideration. Number four, period, right? These are the four aspects of the lease. In our old accounting standard, the definition of a lease is, the definition of the lease was, lease is an agreement where the parties or the lessor conveys the right to use of an asset in the favor of the lessee for a consideration, for a fixed amount of consideration, or for a consideration in exchange for a consideration for a period of time, right? This was the definition of the older definition of the lease agreement, of the lease. If broadly I will tell you, these four important ingredients are there in the definition of Ind AS 116 lease as well. But there is two big change, right? The older version of accounting standard AS 19 says that, or Ind AS 17 was saying that, lease is an agreement wherever the lessor conveys the right to use. But instead of the word right to use, here the word is right to control the use. Right to control the use. So the older word was right to use of an asset. Right to use of an asset. But in Ind AS 116, instead of right to use, the word has become right to control the use of an asset. Right to control the use of an identified asset. Instead of asset, the word become identified asset. Right? So friends, for an agreement being a lease agreement, there must be two parties, two or more parties, which is lessor or lessee. And there must be a transfer of right to control the use. There is a difference between right to use and there is a difference between right to control the use. I will explain it. Okay. Right to control the use of what? Of an identified asset. Of an identified asset. Okay. Of an identified asset. Friends, why the word identified asset has been used? Friends, the word identified asset has been used because when it talks about control the use, right? So how the use can be controlled? Till the time the asset is not identified. Okay. And that is why the word identified asset has been used. Right? So what is a lease agreement? What is a lease contract? Where the lessor and lessee are there. The lessor transfers the right to control the use of an identified asset in exchange for a consideration for a period of time. Right. Now we will discuss these two aspects, identified asset and right to control the use in detail, right, with the help of some illustrations. Right? Is that clear? The definition is clear? Yeah? Is that clear? Vikalp is asking, sir, whose liability is to pay property tax, lessor or lessee? Vikalp, although this is not a subject of Ind AS 116, but see, what is a property tax? Property tax is a tax which is given on the, which is levies on the property, right? So who is liable to pay, owner or the lessee? Of course, owner. Generally, the owner, I mean to say lessor, has to pay property tax. But in some cases, in some state or in some areas, if the lessor will say that, you see, I am paying the property tax for this year, and this year you are using my property, so you have to pay the tax. Probably lessee also may pay. So it is more from the perspective of the agreement, that how you are drafting your agreement. Okay. If agreement is not clear, generally the liability is relating to the lessor. Okay. Friends, right to control the use is broader than right to use. Yes, you are rightly mentioned, Namrata. Right to control the use is a much broader term in comparison to right to use. Okay. Okay. Now first we will discuss identified asset. Okay. What is meant by identified asset? Identified asset are those assets which is explicitly stated in the contract, or it is implicit, or it is implicit in the contract. What is meant by explicitly written in the contract? All property related agreements, right? They are the explicit case of identified asset. You have seen that the description of the property, the address of the property is given in the all the property rental agreements, right? So these are the cases of explicit agreement, right? So this is the case of explicitly mentioned of identified asset. Okay. What is meant by implicit? For example, the lessor has only one asset, or lessor has a specific asset which lessor has manufactured or lessor has renovated or constructed for a particular lessee. Even though it is not stated in the contract, but it is implicit that this is an identified asset which is given to the lessee, right? This is an identified asset given to the lessee. For example, the lessor was having a building, okay, and the lessor has given this building to a school, and the lessor has renovated or reconstructed this entire building to a particular school. In this case, the lessor has only one building, and this building was specifically constructed, renovated, or reconstructed for the purpose of use by a particular school, right? And hence, although it is not explicitly mentioned in the contract, it is implicit that this will be an identified asset, right? Is that clear? Friends, there is an exception. It says that if the supplier, I mean to say lessor, has a substantive substitution right throughout the period of use of that asset, in that case, the asset will not be considered as an identified asset. Now, what is that? First of all, what is meant by identified asset? Identified asset are those assets which can be explicitly mentioned in the contract, explicitly mentioned in the contract, explicitly mentioned in the contract, or it is not mentioned but it is implicit in the contract, right? Implicit in the contract. It is understood. Right? Sir, but when you will say it is not an identified asset, I'll give you one example. You guys must have seen during the course of your audit, the companies like big PSU companies, public sector undertaking, they are hiring car. They are hiring car on a lease basis, right? Like when I went to audit for a PSU or for electricity company, government electricity company, so usually there were some Innova or Bolero or Scorpio. these cars used to take us from the guest house to the office, right? Or wherever we want to go, these cars used to take us to any places. And I have asked the account officer that whether these car belongs to the company or what about these cars, because every day the same car came to take me. So the account officer told that, sir, we have entered into a contract with a car provider, and we are getting these cars on a lease basis, right? Then I told him that how come this is possible that since last 1 month, every day same car is coming to take me? So he told me that, sir, whenever we raise a tender, whenever we float a tender, or whenever we entered into an agreement, let's say we want 5 cars, right? We specify the make and model, that we want to have 5 Innova car, which is having a model, or which is a model of on or after 2021. So we are specifying model number, we are specifying the color of the car, we are specifying the features of the car, we are specifying the year, model number, make, everything, right? We want Toyota Innova car. And when the agreement is getting finalized, the car numbers are also mentioned in the contract. What does it mean? Let's say the agreement is happening for 1 year, and in the agreement, the car provider is also mentioning the car number DL1XY2523, DL1XZ5253, DL1XV2423. So they are also mentioning the car numbers. What does it mean? What does it mean? It means that it is explicitly defined in the contract that these 5 cars will be used by the company. These 5 cars will be used by the company. The lessor or the car provider does not have a right to substitute these cars. For example, the lessor has these 5 good cars, right, in their fleet, and the lessor has given these cars to the company, and tomorrow the lessor wants to replace these cars with the other cars. For example, the lessor got a contract from another company as well, and to catch the contract, the lessor wants to use these good cars into that company and the older version of car into this company. Can he do so? Answer is no, he cannot do so. He cannot do so. It means the lessor does not have a substitution right. The lessor does not have a right to replace these cars with the alternative cars, right? The lessor does not have a substantive substitution right. Are you able to understand with the help of this example? This is a very layman example which you have seen in the course of your audit, right? So the lessor does not have a substantive substitution right. The lessor cannot replace the cars, right? The lessor has to provide the cars only those cars which are bearing those make and model and the numbers, right? Then I told the accounts officer, okay, it means these are the identified asset explicitly mentioned in the contract, right? It means it is meeting the definition of identified asset. But friends, had the number not been mentioned on the contract, let's say the car provider has 500 cars and he has told that only Toyota Innova car, the company will provide 5 Toyota Innova cars to the XYZ Limited. Okay, the car provider will provide 5 Innova car. In this case, can you say that it is explicitly or implicitly identified in the contract or mentioned in the contract? Answer is no. He can send you any 5 cars. He has 100 fleet of Toyota Innova cars. He can send you any 5 cars, right? He can replace those cars. For example, tomorrow, if a high profile person is coming into XYZ Limited, he will send the new cars. Day after, if some high profile person are coming or foreigners are visiting for another company, so he will send those cars to there, right? So that he will charge a good amount, right? It means the lessor has a right to replacement. Lessor has a right to replace those cars. Okay, right? Amrita, this is one of the concepts which I am taking from my audit experience. Okay, so friends, the time when the make, model, and number of the car are mentioned in the contract, it become a explicit contract. It become a explicitly mentioned in the contract, and the lessor does not have a right to substitute the asset, right? In this case, it will be qualify the definition of identified asset, right? Like property agreements are qualifying the definition of identified asset. The car agreement will qualify the definition of identified asset provided the make, model, and numbers are mentioned in the contract, right? If for making a lease contract, the underlying asset should be identified asset. The underlying asset will not be identified asset if the supplier or the lessor, supplier means lessor, if the lessor has a substantive right to substitute the asset throughout the period of use. Means if the lessor has a substantive right, substantive means exercisable right. The lessor has an exercisable right to replace the asset throughout the period of use. And the rights will be substantive only if both the conditions are satisfied. Number one, he has the practical ability to substitute the alternative asset throughout the period of use. Like in the case of car agreement, if it is not explicitly mentioned in the contract, he has the practical ability to substitute the other cars with these cars, right? He can send any cars. He would economically be benefited from doing so. He would be economically be benefited from doing so. Yes, of course, he would be economically benefited, and that is why he will send the newer cars to the other company, right? So that he will charge extra amount, right? He would. So when the rights will be considered as substantive, number one, the lessor has a practical ability to replace the car. I mean to say to replace the asset, substitute the alternative asset. Second, the lessor would be economically benefited also. If his rights or obligation to substitute become exercisable only on occurrence or non-occurrence of an event, then his rights are not substantive. For example, although the lessor has make a contract with the lessee and the lessee has asked him to put the numbers of those 5 cars, specific numbers. But when the car will break down, let's say one of these car has break down, then what lessor will do? The lessor will replace the car for a temporary period of time till the time the car will not be repaired. In this case, it is a protective right. It is not a substantive right. The lessor will not be benefited by replacing this car. The lessor is bound to replace the car because of the breakdown. Is that clear? Sir, can you take another example? Yes. Have you went to the airport? Have you went to the airport? Or have you seen any warehouse? Have you seen any warehouse? Big warehouse? I went to a warehouse of Central Warehousing Corporation, Government of India, CWC. What they do? Let's say there is a big warehouse, okay? A big warehouse of, let's say, of 25,000 square feet, okay? 25,000 square feet or 50,000 square feet. And they have made some blocks. They have made some rooms or they have made some blocks, right? In this 50,000 square feet, they have made 50 blocks to store the goods or store the items or articles of any company. Now let's say I'm a company and I want to use the services of this warehouse, or I want to use the area of this warehouse for storing my products. The warehouse says that, okay, we will give you 1,000 square feet of area, right? We'll give you 1,000 square feet of area, and these are the racks. You can just put your items into these racks, right? So I have put my inventory on, let's say, out of those 50 racks, I have put my inventory in the second rack, in the second area. When I went to visit my warehouse after 10 days, I found that on the second plot, or I would say on the second place, my inventory was not there. The inventory belongs to someone else. My inventory has been transferred to rack number 10. After 5 days, when I went to the warehouse, my inventory was shifted to rack number 14, right? So the lessor has a right to replace the area wherever he wants. He will give me 1000 square feet, right? Because the container occupies the area of 1000 square feet. So wherever he will give me 1000 square feet. But instead of giving me the place on the front, right? He is replacing my area from any area, right? And he is giving the area in the front to the newcomers, okay, to the new customers. So in this case, the lessor has a practical ability to substitute the alternative asset throughout the period of use, right? So the lessor is changing my area. I cannot say that this area is fixed. Second, the lessor is getting a benefit by replacing the alternative area to area allocated to me, right? So in this case, can I say that this is an identified asset? In this case, can I say this is an identified asset? Yeah. Guys, are you able to understand these examples? You're not able to understand these examples. In this case, can I say that it is an identified asset? Answer is no. I cannot say this is an identified asset because the lessor keeps on changing the area. The lessor has a practical ability. He has a substantive substitution rights, right? He has a substantive substitution right. He has a practical ability to replace the asset with another asset. Third example, airport. When you go to the airport, you must have seen a lot of, outlets like Cafe Coffee Day, Starbucks, right? Or other outlets. Let's say the airport company will enter into a contract with Starbucks, and Starbucks says that, see, I want an area, I want this 500 square feet of place where I can put my counter, install my counter, and I need this area which is earmarked to me and which is just in front of the gate, in front of the entry gate, so that the people will come and they will see my outlet and they come and they can have a coffee. And in the agreement, the specific area is mentioned that the stall number 14, which is in front of the gate, right? This area is allocated to Cafe Coffee Day, right? This area is given to Cafe Coffee Day. Is it a case of identified asset where in the agreement the area, the place, the description, right, has been mentioned? Is it a case of identified asset? Answer is yes. The place is explicitly identified. No one, I mean to say, during the period of agreement, the lessor cannot replace this area with the another area, or the lessor cannot give this place to other company or other vendors or other outlets. Okay. Now at the same time, in few cases, the airport agencies or airport authorities or the company which is maintaining the airport has entered into a contract with the company and says that, see, they say that, see, we will give you 100 square feet of area, right? And you must have seen some vendors, right? They put just temporary structure and they keep on rolling and moving, right? So today you will see a vendor, and these vendors are just like they are carrying their goods and services. They are carrying their goods into a kind of a vehicle, right? And today they are having a vehicle at this point of time. Tomorrow you will find the vehicle at a different place, right? They keep on moving and rolling. So airport will say that, see, I'll give you only 100 square feet of area, right? And it is at my wish that where I have to give you the place. For example, I'm allowing him to stand near to the ticket counter or to put his outlet near to the entry gate. But if tomorrow, let's say, if a new vendor will come or a new outlet or company will come, then what will happen? Then I will tell him that please take your outlet to at some different place. Okay, no worries. I'll give you the same space, but you are not allowed to put this outlet in front of the gate or in front of the ticket counter. Right? In this case, the lessor has substantive substitution right. The lessor has a practical ability to replace the asset through an alternative asset. Right? And the lessor is economically benefited from doing so. The companies who are putting their stalls into a place where they do not have a fixed place, where they do not have an allocated place, in that case, the concept from the lessee perspective, if this is not an identified asset, and if this is not an identified asset, this will not be covered under the lease agreement, and this will not fall under Ind AS 116. Sir, in that case, what will happen? For example, I am a juice wala, right? Let's say there is a Gupta Sikanji wala or Gupta juice wala. Okay, and Gupta juice wala has a counter and it keeps on rolling and moving, and I am a big company like Gupta Private Limited or Gupta Limited, Gupta Juices Limited. I have around 200 outlets across all the airport and all the railway stations, and sir, I am paying a rent also, because my outlet will be at railway stations or airport. Of course I have to pay the rent. I am a lessee. Sir, whether I'm supposed to capitalize the right of use asset, I'm supposed to apply Ind AS 116 accounting in this cases. Namrata, will you do Ind AS 116 accounting if I'm a Gupta Juice Limited and I have 200 outlets across my airport and railway stations, right? And at no any place the outlets are not given a fixed space, fixed area. The fixed area is not allocated to any of my outlet. These all are temporary structure and they keeps on moving and rolling. So in this case, can I apply Ind AS 116 accounting? No. Namrata is saying no. You're right, Namrata. Why? Because the first test of lease agreement is missing. And what is a lease contract? A lease contract is a contract where the lessor transfer the right to control the use of an identified asset, not an asset. Asset is there, but identified asset is not, right? So the lessor transfer the right to control of use of an identified asset. And when the asset will be identified, either it is explicitly written in the contract or it is implicit in the contract, right? It is not written, but it is understood. Okay. And when you will say that it is not explicit or implicit, when the lessor has a substantive substitution right and the lessor has a practical ability to exercise that right, and lessor will get some benefit as well, right, by this thing. Have you completely understood? Sir, तो हम करेंगे क्या? If I have to pay the rent and I'll not apply Ind AS 116, then what accounting I'll do? You just need to, whenever you pay the rent, you have to recognize the expense to bank or expense to outstanding expense on an accrual basis, right? You're not required to capitalize right of use asset. Is that clear? See, Mansa is saying, is it only lessor's wish or is it any criteria for determining substantive right? Mansa, for example, 6 months down the line, you will become a chartered accountant. Okay. And you went to a client like a partner or like an auditor. So the client is doing Ind AS 116 accounting. The client is capitalizing right of use assets, right? And the client is also crediting this liability. So as an auditor, you will ask for a lease agreement. And the first question you will ask, is it an identified asset? Is it an identified asset? So how will you identify that it is an identified asset or not? You will ask the client, is it mentioned in the contract? Whether the specifications, like in my example of car agreement, right? Normally the car make and model number and the car number, registration number is mentioned in the contract, right? So you will ask, is it mentioned in the contract? If you are getting a space on airport, railway station, warehouse, whether the specific number is mentioned in the contract. You are booking a room in the hotel. for 2 years. Like many companies, if they don't have a guest house, normally what they do, they used to normally these companies have entered into a contract with a hotel, right? And they say that 10 rooms, we need 10 rooms throughout the year. 10 rooms should be blocked in our name. And they say that we need the rooms on the second floor. It is from 201 to 200, 201 to 210, right? So specific room numbers have been blocked for these companies. Specific room numbers have been blocked for these companies for throughout the year. So this is a case of identified asset. But instead of putting a room number, if the hotel will say that, okay, we'll provide you 5 rooms, but it is not necessary that the 5 room will be at second floor, third floor, fourth floor, fifth floor, or first floor, or if this 5th room will be given at the same floor. If we will have the rooms, we will provide you. Okay, so these 5 room can be scattered at any place in the hotel. Okay, probably 2 rooms will be there in second floor, 1 room will be in the third floor, 1 room in the 7th floor, right? In this case, the hotel owner has a substantive substitution right. Why? Because if let's say I as a guest will go there and I need a room, of course I am not a committed guest. I mean to say the company is a committed guest, the company is a committed customer, but I need a room only which is a pool facing, and the second floor room is only pool facing. So instead of giving that room to that company, the hotel owner will give that room to me. Why? Because he is charging a premium to me, from me, right? So he is economically benefited by doing that. And in the agreement, when you look at the agreement, no any room number is mentioned in the agreement. It means it is not an identified asset. It is not an identified asset, right? Sir, what could be the example of implicit contract? A big company like ONGC, right? They have entered into the agreement with a company called Ramada, or a company called Hayat or Taj. And in Delhi, Taj has only one hotel in Delhi, for example. And they have said that we want to have your entire hotel on a lease basis for a period of 1 year. Right? So in Delhi, only one hotel is there, even though the property number is not mentioned, right, in the agreement. Still, it is implicit. It is understood that if it is written that the Taj Hotel has been given on a lease to XYZ Limited, ONGC Limited, for a period of 1 year or for a period of 2 years, 3 years, it is implicit in the contract. There is no requirement of putting the address, name, number. There is no requirement. Is that clear? Mansa, Namrata, Purviven. Is that clear? Bhaskar, is that clear? I hope the concept of identified asset is clear to all of you. Yeah, guys. I have taken 3-4 layman and practical life examples. Is that clear? Is it clear in your mind or clear from your mind? Is it clear in mind or clear from mind? What is that? Very good. Great. Yes. Now let's discuss the illustration number 2 from the ICI study material. Assets implicitly specified in a contract. Company XYZ enters into a 10-year contract with a supplier, means lessor ABC, for the use of rolling stock, specifically designed for customer XYZ. In Ind AS 116, you will get the word as a customer, supplier, right? Since the concept is for the control, right? Transfer of control of use. And hence the word is customer and supplier is used. So customer means lessee, supplier means lessor. So the lessee XYZ enters into a 10-year contract with lessor ABC for the use of rolling stock, specifically designed for this lessee. It's something which is specifically designed for the lessee. What does it mean? It means it is implicit in the contract. It is only for customized for the lessee. So it doesn't matter the number, the name, or whatever description will be there or not, it is understood that it is for you. The rolling stock is designed to transport material. You know, rolling stock means lorry, the train compartment, I would say, or the train coaches. The rolling stock is designed to transport material used in customer lessee XYZ production process and is not suitable for use by other customer. It is specific for this person, for this company. The rolling stock is not explicitly specified in the contract, but supplier ABC owns only one rolling stock that is suitable for customer XYZ use. This lessor has only one asset. That asset is customized for the lessee. It is not related to other customers, right? If the rolling stock does not operate properly, the contract requires supplier ABC to repair or replace the rolling stock, right? So the supplier does not have substantive substitution right. If there is a problem, there is a defect or default in that lorry or coach, only in that case, the lessor has to replace that. Otherwise, no. Whether it is an identified asset, tell me whether it is an identified asset or not. Yes, it is a identified asset. It is a identified asset. Okay. Though the rolling stock is not explicitly specified in the contract, for example, by serial number, name, it is implicitly specified because the lessor ABC must use it to fulfill the contract. Right? Namrita is asking, sir, what does it mean? Only on occurrence or non-occurrence of event. So Namrita, for example, the lessor or lessee has entered into a contract where the car, specific serial number and registration number has been mentioned. And the lessor will only replace those cars, or the lessor will substitute those cars only when the breakdown will be there, when the car needs repair or the car needs service. For example, after every 1,000 kilometer or 10,000 kilometer, the lessor is required to do the servicing of that car, and it will take around 2 days. Okay, so in that case, the lessor has to replace it with another car, right? So the lessor is not replacing the car for its own benefit. The lessor is replacing the car just to repair those cars or to service those cars so that it will be in a serviceable condition, right? So if it is required to replace on the occurrence of non-occurrence of some future events, in that case, you cannot say that the lessor have a substantive substitution right, right? Okay, is that clear? Because अगर कार breakdown हो गया, अगर कार damage हो गई तो कार तो ठीक करनी पड़ेगी ना. If the car met with an accident, then of course he has to replace that car, right? So in this case, it is said that this is a identified asset with protective right. Illustration number 3. Asset implicitly specified in the contract. Customer XYZ enters into a 10-year contract with supplier ABC for the use of a car. The specification of the car is specified in the contract, like brand, type, color, option, registration number, etc. At inception of the contract, the car is not yet built. So the company has entered into a contract with Maruti to take the car on a lease basis. And Maruti is in the process of manufacturing that car. But the company has given the specifications, right? Is it an identified asset? Answer is yes. So when the car will build and when the car will be used by the company, will start getting used by the company, of course, lease accounting will start. Yes, the car is an identified asset. Though the car cannot be identified at inception of the contract because it is not yet built, it is implicitly specified at the time the same will be made available to customer XYZ, right? Clear in mind for all of you? Next illustration. I have a lot of illustration. Apart from my own examples, I have a lot of illustration. I'm using a lot of illustration from ICI study material. Illustration number 4. Substantive substitution rights. An electronic data storage provider. An electronic data storage provider provides services through a centralized data center. I am a data center provider and I am storing data for different companies. So it requires space. It requires space on the server. that involves the use of a specified server, server number 10. For example, I have 10 servers and I am storing a data of a company which requires the use of a specified server, and the server number 10 is that. The supplier maintain many identical server in a single accessible location and determine at the inception of the contract that it is permitted to and can easily substitute another server without the customer consent throughout the period of use. The supplier, the lessor, is maintaining multiple servers. And at the inception of the contract, the lessor is clearing this thing that I can keep your data either on A drive, B drive, C drive, D drive, E drive, F drive, whatever server. So without your consent, I can substitute your data to another server. Okay. Further, the supplier would benefit economically from substituting an alternative asset because doing this would allow the supplier to optimize the performance of its network at only a minimal nominal cost, right? So when the supplier is reshuffling these data to the different servers, it is optimizing the performance. And of course, the supplier is getting a benefit from that, right? In addition, the supplier has made clear that it has negotiated this right of substitution as an important right in the arrangement. And the substitution right affected the pricing of the arrangement as well. And see, this is a practical aspect. The supplier has made it very clear, the lessor has made it very clear. See, like when you take any property on a rental basis, right? So the lessor will say that, see, this rooftop, this you cannot use this roof, right? Okay, I am giving you only the flat, I'm not giving you the rooftop, right? And I can sell this roof right, or I can lease this roof right to anyone else. So friends, like in this case, the supplier has made it very clear, see, that this substitution is an important right in the arrangement, and I can substitute your data to different server at any point of time. And it has also affected the pricing of the arrangement. For example, if someone will say that you cannot use a roof, although I know that I have to be in the flat and hardly I have to use the roof. For example, I'm also living in a rental accommodation, and in a complete 1 year, I have used the rooftop only once in a year, right? You know, what is the date? That was a Karwa Chauth, where I have to see the moon. I have to check whether moon is there or not for my wife, right? But when supplier will tell me, see, Alok, you cannot use the rooftop, you cannot use the roof, right? In that case, I will say that please reduce my rent, right? Although I'm hardly using this roof, right? So friends, it has affected the pricing of the arrangement as well. Whether the substitution right are substantive. Substantive means whether the lessor has a practical ability to substitute. Second, whether the lessor is getting benefited. So yes, it is substantive. And whether there is an identified asset. Assume the same facts as in scenario A. So in this case, there is no identified asset and the lessor has a substantive substitution right. In the scenario number B, let's discuss second scenario. Assume the same facts in scenario A, except that server number 10 is customized and the supplier does not have the practical ability to substitute the customized asset throughout the period of use for other customers. Additionally, it is not clear whether the supplier would benefit economically from sourcing a similar alternative asset. In this case, whether the substantive substitution rights are there and whether it is an identified asset, answer is yes. It is an identified asset because it is customized for the customer and the agreement is not clear whether the substantive right will be there or not, right? So in this case, substantive right will not be there, substitution right will not be there, it will not be available to the lessor, and yes, this asset is an identified asset. In this case, no identified asset. In this case, yes, identified asset. I hope it is clear to all of you. Yeah, the concept is clear, guys. Is it clear? The solution is also given. So now I have to discuss the second leg of right to control the use of an asset. It's 8:30 now. Let's have a break for 5 minutes. Then we will discuss this concept. Okay. Yes. Now to finalize whether an agreement for an asset will come under the scope of lease asset or not, will come into the scope of Ind AS 116 or not, we have to see whether it is an identified asset and whether the control of use is transferred, whether the right to control the use is transferred for this identified asset or not. Right? We have understood one leg of identified asset. Now we want to understand the meaning of right to control the use of an asset. Right to control the use of an asset. I will take one lemon example to explain you this concept. For example, I am giving a car to my friend, right? Viraj is my friend, and Viraj came to me and he said, "Sir, I need your Skoda car." I said, "Okay, Viraj, please take this car." And when I'm giving him the keys, when I'm giving the keys of my car, I'm telling him, "Viraj, see, you cannot take this car out of Delhi. Please don't take this car out of Delhi, right? If you have to use this car, please use it in Delhi only." Second, the second restriction I'm imposing on him that you cannot drive this car beyond 8 p.m. I don't want that you will drive this car in night. Third, I'm telling him, if you want to put a fuel in this car, please take a petrol from sector 15 HP petrol pump in Gurgaon, right? Or let's say XYZ petrol pump in Delhi, located in this area. Fourth, I'm saying that please don't do party in my car. Okay. Fifth, I'm telling him, don't carry more than 3 or 4 people in this car. You can see I'm putting a lot of restrictions. When I'm giving him the car, I'm putting a lot of restrictions on him. I'm putting a lot of restrictions on him. So friends, if you will see in this case, although I have given him a right to use that car, although if I have allowed him using this car, but I am controlling the use of that car. I'm the one who is controlling the use of the car, right? So what is the difference between right to use and right to control of an use? So right to use means you are using that car, you got a right to have a possession of that asset, and you have got a right to use that asset. But in which manner you have to use that asset, how you have to use that asset, right? Where you have to use that asset, the way you have to use the asset, who is controlling, right? This is known as a right to control the use of an asset. If the lessor is controlling the right of use, if the lessor is controlling the right of use, the lessor is explaining you, the lessor is telling you that how this asset has to be used, for what purposes, how it has to be used, right? And he is telling you these things. It means the right to control the use is still lying with the lessor. It has not been passed to the lessee, right? But if the lessor is saying, see, you cannot use this car after 1 lakh kilometer because the limit of the car is 1 lakh kilometer and it will break down. Okay, after that. Or the lessor is saying, don't drink and drive the car. If these are the examples in this case, the lessor have a protective right, right? So he is giving you the instructions not from the perspective of the use. Rather, he is giving you the instruction to ensure that his vehicle, his asset, his car will be in the safe custody, will be in the maintainable condition, right? And that is why he is telling you these conditions. These conditions are not substantive conditions. These conditions are the protective conditions, right? In this case, you cannot say that the lessor is controlling the use. The lessor is telling you that how to use that asset and for what purpose it has to be used, right? So friends, for covering an asset into Ind AS 116, the first thing is it has to be identified asset and there must be a transfer of right to control the use of that asset, right? Have you understood the meaning of this? So now the right to control the use of an identified asset has two sublegs. One, the lessee has a right to obtain substantially all of the economic benefit from the use of the identified asset. the right to obtain substantially all of the economic benefit from the use of the identified asset. For example, if I am using my house, I have taken a house property on a lease basis. So the rights relating to the use of the house property, the rights relating to use of that flat, use of that house, it vested. The substantially all the benefits relating to the use should be vested to me as a lessee. For example, it protect me from the sun, it protect me from the rain, it protect me from the summer, winter, cold, right? It allows me to put whatever I want to put in my house, provided I cannot put the illegal things in my house. Okay. So that is kind of a protective thing. If lessor will tell me you cannot put alcohol or you cannot put bomb or smuggling item or artilleries. So of course, this is a protective thing. You cannot allow trespassers in your house, right? So you cannot allow any person who is whose identification is not confirmed, right? So this is more from the protective scenario. But as far as the benefits are concerned, all the economic benefit from the use of the asset should be substantially belongs to the lessee. In that case, we can say that the right to control the use have been transferred to the lessee. Plus, right to direct the use of the identified asset has also been given to the lessee. That right to direct the use means how to use that asset, for what purpose the asset has to be used. It is also given to the lessee. So first, the benefits should given to the lessee, plus the right to direct the use has also been given to the lessee. If these two conditions will be satisfied, then we can say that the right to control the use of an identified asset is there to the lessee, and 116 accounting will prevail. So friends, these rights should remain throughout the period of use. If the customer has the right only for a portion of the term, then the contract contains lease for the limited period only. For example, for 5 years, the lessor has given a property on a rental basis. In the initial 3 years, there is no any restrictions. But in the next 2 years, the lessor has put so many restrictions in the next 2 years, right? So in this case, you can say that the right to direct the use of the identified asset, right? The right to control the use of an identified asset is given to the lessee only for the first 3 years, and the lessee accounting, right of use, leasehold obligation, this lessee accounting under Ind AS 116 will only be applicable for the first 3 years. In the last 2 years, whatever the lessee is supposed to pay, it has to be accrued in the P&L as and when accrued. Is that clear? What is meant by economic benefit? Economic benefit means the lessee. Economic benefit from the use of the asset means the lessee can use the asset. The lessee can hold the asset. For example, if the lessee will not use the asset, the lessor cannot shout out. If I have taken a house property on a lease basis and I'm not using that property, the lessee cannot tell me anything, right? He cannot tell me anything if I'm paying him a rent. So it's at my wish whether I'm using that property, I'm not using that property, right? Or if I'm using that property with all the legitimate purposes, the lessee, the lessor does not have any right to tell me anything. Or if I want, I can sublease the asset also. Okay. And the benefits relating to the use of the asset has been completely vested to me, not to the lessor, right? These are the economic benefit. The benefit could be the primary output plus byproduct or any other benefit. For example, if I'm taking a machinery on a lease basis, right? So whatever production I'm doing, that is belong to me. Or by doing that production, whatever byproduct is coming out of that machinery, what byproduct is coming out of that production, that is also belongs to me. Or any other benefit. For example, the government is giving a subsidy on the production, and I'm doing the production from a machine which I have taken on a lease basis, right? So that benefit also belongs to me. But in the agreement, if lessor will say that whatever production you will do from this machinery, and if the government will give you any benefit, any subsidy for the output produced from my machinery, that benefit will belong to me. In that case, we cannot say that the right to obtain substantially all the economic benefit have been transferred to the lessee. We cannot say that. Are you getting me what I have explained you? Are you getting me what I've explained you? Viraj is saying, sir, wow. Okay. Guys, So far, have you understood? When you will say that right to control the use, and with the example of myself and Viraj, have you understood the difference between right to use and right to control the use? Yeah. Is that clear? Shall I move forward? Very good. Right to have a substantially all the economic benefits should be vested with the lessee. Second, right to direct the use of identified asset should be with the lessee. A customer has the right to direct the use of the identified asset if he either has the right to direct how and for what purpose the asset is used. So who is deciding? The lessee is deciding how the asset is going to be used and for what purpose the asset is going to be used. Lessor is not deciding, right? Or if the relevant decision about how the asset has to be used and for what purpose the asset has to be used are predetermined, and the customer has right to operate in that manner throughout the period of use. For example, the asset is coming out with a specification where all the allowed users have been written in the in that note of that asset, right? So basically, how this asset is going to be used, all the instructions, operating instructions have been mentioned in the asset catalog. Okay. So how this asset has to be used and for what purpose the asset has to be used, it is predetermined. Okay, it is predetermined. For example, the lessee has got a machinery from a lessor, and it is requirement of that machinery that the machinery has to be stored in a cold place, right? The machinery should not be used for more than 10 hours because it is kind of a machinery that after using a 10 hour of production, this machine needs a resting time of, let's say, 10 to 12 hours, right? And this machine, when the production has to be happened from this machine, the raw material has to be used in the staggered manner. So how this machine is going to be used and for what purpose the machine is going to be used, the operating instructions are already predetermined, right? In that case, you say that, sir, the lessee does not have a right to direct that how and for what purpose the asset is going to be used, right? But in this case, you have to check another condition. What is another condition? If the right to direct how and for what purpose the asset is going to be used are predetermined, in that case, the supplier does not have any right to change the operating instructions, right? So at the inception of the contract, the supplier or the lessor is saying that you have to use this asset in this manner, right? Which is predetermined. But subsequently, the supplier or the lessor does not have any right to alter those operating instructions. It means he is not controlling the use, right? Because you don't have any right to change the instructions in future. Is that clear? Is that clear? Is that clear, guys? For example, when you will sit in exam, the examiner will say that you will have 3 hours, and 3 hours means 3 hours. It is at your wish whether you will attempt question number 1 first or question number 5 first. And whatever ICI has told you that you will have 3 hours, ICI don't have right to come in between the examination slot and they will tell that no, the exam is not for 3 hours, it is 2 hours and 45 minutes. They cannot say that, right? So in the same manner, the lessor does not have a right to change the operating instructions in cases where the operating instructions, the use, how it is going to be used, for what purpose it is going to be used is predetermined. Third, the asset has designed in such a manner, it predetermines how and for what purpose the asset will be used throughout the period of use. Okay. If the asset has determined in such a manner, so lessee and lessor has entered into a contract, lessor has developed the asset for the lessee, and it has been designed in such a manner that it only provides, it is predetermined that how and for what purpose the asset is going to be used, right? So friends, a customer has a right to direct the use of the identified asset if three conditions are satisfied. Not all three conditions, either of the condition. Number one, the lessee himself has a right to direct, right to control that how this asset is going to be used and for what purpose the asset is going to be used. Number two, If how and what is predetermined, the lessor does not have a subsequent right to change the operating instructions, right? Third, if the asset has been designed in such a manner which predetermines that how and what purpose asset is going to be used. So in these three conditions, you can say that the lessee has a right to direct the use of that asset. The supplier may have protective rights, like the supplier can say that in every 6 months you have to do the service of that car, right? Because it is important, otherwise the car will break down. Okay, or you will not use the car beyond 1 lakh kilometers, because the limit of the car is 1 lakh kilometer only. Or in Delhi, the diesel car are not allowed to run on the roads for beyond 10 years, right? So in this case, beyond 10 years, in this case you cannot say that if you will run the car beyond 10 years, probably the traffic police will seize the car, right? And it will have a loss to the lessor. Okay, so the lessor will say that after 10 years, if the expiry will be 10 years, and then after 10 years you will not use this car, you will intimate us and you will not use this car, right? So these cars, these examples are protective right example. The supplier or lessor may have protective right which typically define the scope of the customer's right to use, but does not prevent him from having right to control the use of the asset. Is that clear? I hope it is well clear and clear in mind to all of you guys. Now I will discuss some illustrations and then I'll conclude this concept, right? ABC Limited enters into a contract with XYZ Limited, which grant ABC Limited exclusive right to use a specific grain storage facility over a 5-year period in the month of May and June. So friends, ABC is a lessee and ABC got an exclusive right to use a specific area, to use a specific grain storage facility over a 5-year period in the month of May and June, right? For 5 years, ABC is getting a right to use a specific area in the month of May and June. During these months, ABC Limited has a right to decide which crops are placed in storage and when to remove them, right? And in the month of May and June, ABC, the lessee, has a right to decide which crops are going to be stored in the storage area and when to remove them. XYZ Limited provides the loading and unloading services for the warehouse activities. The lessor is providing the loading and unloading services for the warehouse activities. During the other 10 months each year, the lessor has the right to determine how the warehouse will be used. For 2 specific months, the agreement is for 5 years, and for every 2 months, that is May and June, the lessee has an exclusive right to use this asset. But for the remaining 10 months, the lessor has exclusive rights to decide that how this warehouse will be used. Which party has a right to control the use of the identified asset during the period of use? Tell me. In this case, you have to bifurcate between two things, right? So in this case, ABC Limited, the lessee has a right to control the use of the identified asset during the period of use. During the period of use means May and June, because they have the power to determine how the warehouse will be used during the contractually defined usage periods. Usage periods, and usage period is May and June. Okay, the analysis should focus on the rights and economics of the use of the warehouse for the specified usage period, that is May and June. During the period of use, ABC Limited has a right to determine how much of a crop to place in a storage and the timing of placing and removing it from storage. These rights are more significant to the economics of the use of the asset than the loading and unloading services performed by the lessor during the same period. ABC Limited receives all the economic benefit from the use of the asset during those specified time period. Therefore, the contract contains a lease for a specified period of time. Is that clear? Therefore, the contract contains a lease for the specified period of the term. Is that clear? Very good, Bhaskar. Very good, Janvi, Namrata. Thanks, Radhika. Yes. Now the next case study. This is a very, very, very important case study. So we discussed that the right to direct the use, that how and for what purpose. Now company MNO enters into a 15-year contract with power company PQR to purchase all of the electricity produced by a new solar farm. For example, company MNO went to the PQR power company, and company MNO said that I want to have your power plant on a lease basis. Then PQR told this company MNO, see, when you took this power plant on lease basis, you have to pay me a lease rental, right? You have to deploy your employees. You have to have a expertise of this power generation. Instead of doing this thing, let me do one thing. You can use our power plant as a captive plant. Means we will sell you the entire production, right? We will produce for you and we will sell the entire production in favor of you. So company MNO enters into a 15-year contract with company PQR to purchase all the electricity produced by a new solar farm. PQR owns the solar farm and will receive tax credit relating to the construction and ownership of the solar farm. So PQR is the lessor, he owns the solar farm and he is getting some benefit from the government, right? But this benefit is relating to the construction and ownership. But MNO, who is the lessee, will receive renewable energy credit that accrue from the use of the solar farm. So who is getting the benefit substantially from the use of the identified asset? See, the benefit which PQR is getting, it is relating to the construction. But the benefit MNO is getting, it is relating to the use. Who is getting that benefit? MNO is getting that benefit. Who has the right to substantial benefit from the solar farm? Company MNO has a right to obtain substantially all of the economic benefit from use of the solar farm over the 15-year period. Why? Because it obtains the electricity produced by the farm over the lease term. That is the primary product from the use of the asset and the renewable energy credits. That is the byproduct from use of the asset. First, from use of that farm, entire electricity, entire main product, byproduct, whatever, entire product is coming from that asset is coming to the MNO. Right? Second, the renewable energy credit, which is given by the government, right? It is also given to the MNO who is using this solar farm, right? So in this case, although PQR receives economic benefit from the solar farm in the form of tax credit, but these economic benefit relating to the ownership of the farm. These tax credit do not relate to the use of the farm and therefore are not considered in this assessment. Is that clear? Any doubt? Any doubt, friend? Is that clear or you have any doubts? No? Let's discuss another illustration. Customer X enters into a contract with supplier Y. Customer X means lessee, supplier Y means lessor, to use a vehicle for a 5-year period. The vehicle is identified in the contract, explicitly identified in the contract, identified asset. Supplier Y cannot substitute another vehicle unless the specified vehicle is not operational, like it breaks down. Of course, in that case, it is like a protective thing that the lessor has to replace the different another vehicle with the damaged vehicle. Under the contract, customer X operates the vehicle. He drives the vehicle or direct others to operate the vehicle. For example, he hire a driver. Customer X decide how to use the vehicle. Of course, within the contractual limitation, even if it is your own car, you will not drive beyond the limit given by the government, right? So customer X, you will not drink and drive in your own car as well. So customer X decide how to use the vehicle within contractual limitation. For example, throughout the period of use, customer X will decide where the vehicle goes, as well as when or whether it is used and what it is used for. Customer X can also change this decision throughout the period of use, right? Supplier Y prohibits certain uses of the vehicle. See, customer X is operating, right? First of all, it is an identified asset. It is very clear because the substantive right is not there. It is explicitly mentioned in the contract. Now we need to discuss. First, you need to discuss identified asset. Remember, first you need to discuss whether it is identified asset or not. Then you need to discuss whether right to control the use have been transferred or not. Right to control of use is transferred or not. So in right to control of use, you need to see two things. One, the lessee will have the substantial economic benefit from the use of asset, plus the lessee is controlling that asset, means lessee is directing how this asset is going to be used and for what purpose the asset is going to be used. Okay. Supplier Y prohibits certain uses of the vehicle, for example, moving it overseas. Okay. Supplier Y says that you cannot take this asset, you cannot take this car to Sri Lanka or Nepal or Pakistan, right? And modification to the vehicle to protect its interest in the asset. And supplier Y says that you cannot change the color of this vehicle, you cannot modify this vehicle, and you cannot make it a Tarzan car, you cannot make it a Tarzan Wonder car, right? So these restrictions are not related to the use of the asset. These restrictions are related to the protection of the asset. Whether customer X has the right to direct the use of the vehicle throughout the period of lease, or Y, supplier, has a right to direct the use of the asset throughout the period of use. Tell me, who is having the right to direct the use? Who is having? Who is having the right to direct the use? Yes, customer X has the right to direct the use. You all have given the right answer. Great, Radhika. Awesome, Rahul. And Radhika has told that, sir, in this case, it is an identified asset and the customer has the entire right to direct that how this asset is going to be used and for what purpose the asset is going to be used. So whatever restrictions is imposed by the supplier Y, these are only protective in nature. These are not substantive in nature, right? Is that clear? Okay, very good. Another example, entity A contract with supplier H to manufacture parts in a facility. Entity A contract with supplier H to manufacture parts in a facility, means in a factory. Entity A designed the facility and provided its specifications. Supplier H is having the factory and the land, right? Entity A specifies how many parts it requires and when the part will be available and when it needs the part to be available. Supplier H operates the machinery and makes all operating decisions, including how and when the parts are to be produced, as long as it meets the requirement, it meets the contractual requirement to deliver the specified number on the specified date. Assuming supplier H cannot substitute the facility and hence is an identified asset. Which party has the right to control the use of the identified asset during the period of use? During the period of use. Friends, have you understood this question? No? Let me again explain. Entity A is a customer. It enters into a contract with a supplier H to manufacture some auto parts, to manufacture some, let's say, some parts of machinery in its factory. So entity A wants to enter into a contract with supplier H, and entity A is telling H that Mr. H, please manufacture these parts in your factory, right? And entity A designed the facility and provided its specification. And entity A told that, you know, what should be the specification of my product? The product which I want you to produce, I am giving you the specification that this kind of product I want. The factory and the land belongs to the supplier. Okay. Entity A has only designed the factory, and entity A wants that I need the product to be manufactured in your factory for such a specification, such amount of features. Entity A specifies how many parts it needs and when it needs the part to be available. And entity A as a customer is saying that, see, I need 10,000 parts and I need 1,000 parts every month, let's say. or 12,000 parts in a year, 1,000 parts every month, and I need these parts in the first 10 days of every month. So as a customer, he says that when I want this product, and supplier H is deciding, he is taking all the operating decision, and supplier H is deciding that how this production has to be done, and when the parts are required to be produced, how and what the supplier is managing, right? Supplier H cannot substitute the facility, means the factory, in the same factory this production has to happen, and hence it is an identified asset, right? Now the point is, in this case, whether it is a lease agreement, which party has the right to control the use of the identified asset? Whether X has any control, X has any right to control the use of an identified asset. Whether X has any control to use this factory as per its own, how this factory is going to be used and for what purpose the factory is going to be used. Whether X has any control on that, answer is no. So entity A does not have any the entity A does not have any control, does not direct the use of the asset that most significantly drives the economic benefit, because supplier H determines how and when the equipment is operated once the contract is signed. Therefore, supplier H has the right to control the use of the identified asset during the period of use. Although entity A stipulates the product to be provided and has input into the initial decisions regarding the use of asset through its involvement in the design of the asset, it does not have a decision-making right over how and for what purpose the asset will be used over the asset during the period of use, right? This arrangement is not a lease arrangement, this is a supply arrangement, purchase and sale arrangement, right? This is a purchase and sale arrangement. Is that clear? In this case, whenever the goods will be provided to the entity A will recognize the cost. It is not a lease agreement. Is that clear? Okay. Since morning, I have explained you the lease contract, identified asset concept, and right to transfer the control of use, right to transfer the control of use, right to control the use, right? Transfer the right to control of use. These two concepts I have briefed you with the background and history of IFRS 16 and Ind AS 116. And friends, from the institute study material, I have covered around 8 examples. And with my own source, I have covered around 7 to 8 examples, right? So far, I have given you 16, 17 examples. Now, let's discuss the inception of the lease and commencement of the lease. Now, what is meant by inception of the lease and commencement of the lease? For example, Namrata came to Delhi, okay, for the CA examination or for preparing for the CA finals. So Namrata came to my house and she told me, sir, I will be coming in. So she came somewhere in February and she told me, sir, I will be coming from my hometown to Delhi from 1st April, right? And I'm looking for a rental accommodation, right? And she came to meet me on 28th of February. And she was telling me, sir, I need a rental accommodation. I told her, Namrata, my 3rd floor is vacant, right? And it is a 1 BHK. And if you want, I can lease that 3rd floor to you. She said, okay, sir, what is the rent? I told her rent will be 15,000 per month, right? I have shown her the 3rd floor and she was happy. And on 28th February, we have made an agreement to sell. Sorry, we have made an agreement to rental agreement, not agreement to sell, rent agreement. So on 28th February, both the parties have decided what should be the principal terms and condition of this lease. And she told me that I'll use this accommodation from 1st April, right? The agreement will be effective from 1st April. The rent will be 15,000 rupees per month, and these are the terms and conditions. The security will be for 1 month. These are the terms and conditions. So guys, if I talk about 28th February, this is the date when the principal terms and conditions have been established, right? It has been established, right? On this date, the entity has to identify the lease, whether it is a lease agreement or not, whether it is an identified asset or not, whether I have a substantive substitution right. Can I say, Namrata, after when she start using this property, can I tell her, Namrata, please shift to the second floor, please shift to first floor after 2 months? Or can I say, Namrata, for 2 months of time, can you please take this accommodation in my neighborhood, right? So with Mr. X, can you go to Mr. X and his second floor is vacant? Can you use that? Answer is no. So guys, on 28th February, first of all, we will decide whether it is a lease agreement or not. Second, lessor, myself, will decide whether it will be a finance lease or operating lease, because from the lessor perspective, the classification still persists, but from the lessee perspective, this classification is not there. Okay. So friends, 28th February is an inception date of the lease, when the parties will decide whether it is a lease agreement and the lessor will decide whether it is a finance lease or operating lease. But friends, what is the commencement date of lease? Commencement date of lease is a date when the underlying asset is available for use by the lessee. And when underlying asset, when third floor will be available for use to the Namrata, it will be available for use on 1st of April, because the rent will start from 1st of April, right? So commencement date of the lease is 1st of April. Inception date of the lease will be 28th of February. The classification and identification will happen on the inception date of the lease. The accounting will start from the commencement date of the lease, right? So commencement date of the lease is a date on which a lessor makes an underlying asset available for use by a lessee. On this date, the entity will decide what is the lease term of the asset and how the lease will be initially recognized, right? This is known as a commencement date of the lease. Is that clear? Is that clear, guys? So friends, today we have covered these important aspects, and now we need to discuss lease payments and lease term, right? So in the tomorrow class, I will be covering the remaining 2 important concepts and the lessee accounting. I'll start with the lessee accounting tomorrow, right? Due to some important work, I need to conclude the session today itself. Right now, I need to conclude the session right now. If you have any question, I will be happy to answer in the next 2 to 3 minutes. Otherwise, I'll conclude the session today, right? I hope you guys have understood it very well, and I want to thank all of you for being active participants in today's session. And I can see more than 150 interactions are there in the last 2 hours and 15 minutes, right? Thank you so much, friends. Good day. We'll meet tomorrow and we'll try to complete the lessee accounting in tomorrow, right? And then we will have a lessor accounting, and on the last day we will discuss sublease and sale and leaseback transactions. With 4 days, I would say that I will cover a lot of example, case studies, illustrations, questions from Ind AS 116, right? Thank you so much. Bye-bye. Take care.